Kitco Mining special coverage of BMO's 33rd Global Metals, Mining and Critical Minerals Conference is brought to you by First Majestic Silver.
Record production, record reserves, and record free cash flow. This is Paul Harris of Kitco Mining at the BMO Metals, Mining and Critical Minerals Conference in Hollywood, Florida. And joining me today is Al-Joundi, President and CEO of Agnico Eagle Mines and nominee for Kitco's Mining CEO of the Year. Ammar, welcome back to Kitco.
Thank you, Paul, and thank you for having me here.
Well, let's start with your performance last year. 2023 was a great year for Agnico Eagle Mines. As I said, record production, cash flow, and reserves. Why is Agnico delivering when so many of your peers are not?
Well, this was a fantastic year for us operationally. As you mentioned, for a 67-year-old company to have record production, record operating cash flow, record reserves, and importantly, the best safety year we've ever had in 67 years. Every single mine, Paul, either met or outdid its guidance. So I couldn't be prouder of the team. Now, I think one of the reasons Agnico has been consistent, and that's part of who we are, consistent in delivery, is because of our regional approach. While many of our peers who are very good, we know them well, we're friends with them all, they are global miners and they can go into difficult places, and that's a tough business, and they do it well, but it's a tough business. But if you're Agnico and you've been in the Abitibi, for example, for 60 plus years, you know the ground better, you know the people better, you know the suppliers better, you know the contractors better. And that really allows us to have less volatility and more certainty when we're operating our business. So really, it's been a great year, and it's the team on the ground that's delivered it.
With so much going well, is there anything that didn't go as you would have wanted?
No, I don't think so. I think everything went well. You know, the nature of mining is you're always going to have challenges. It was the longest caribou migration season we've ever encountered. There were the forest fires in Ontario and Quebec. These things happen in our industry, but again, with 11 mines and really fantastic team on the ground, we were able to mitigate those risks.
A year ago, you completed the consolidation of the Canadian Malartic mine in Quebec in Canada. How important will that transaction be in the future of the company?
Well, we couldn't be happier, Paul, with that transaction and how it's going. The integration has gone exceedingly well. You know, world-class group of operators, part of the Agnico family. It's gone very well, and we've identified so much potential. And to remind maybe some of the viewers, this is a mine that's transitioning from 60,000 tons a day of open pit at about 1 gram to, in a few years, 20,000 tons a day at roughly 3 grams. So roughly the same production, but it frees up 40,000 tons a day of milling capacity. 10,000 tons a day is a big mine. So imagine now we have 40,000 tons a day in arguably the most prolific gold district in the world, where we have a lot of the ground because we've been there for 60 years. So it's an example of the potential we have to really leverage that investment.
You said during your 2023 results conference call just a few days back that you didn't initially think that the Wasac deposit that you acquired from Yamana Gold with the Malartic consolidation last year would meet your hurdle rates, but it sounded like you're now increasingly warming to it. What's happened there?
Yeah, that's a good question. We were really focused with Yamana, who are great partners, by the way. We were really focused on the Malartic mine because of what we talked about, the potential to really develop that and take advantage of what we've got there. We looked at Wasac. They had a plan of a couple of 100,000 ounces a year. They're smart people. We didn't think it would meet our investment hurdle rates, so we didn't attribute a lot of value. But our engineers have done something, Paul, unusual in the mining space. Rather than going for the biggest, they've said, look, how do we improve return on capital? That's one thing this industry needs to do better, is stop talking about more and more and more and focus more on making money and return on capital. So what our engineers have done is they've looked at a much smaller project, higher grade, with importantly, almost no above ground infrastructure, no mill, no tailings facility. And the idea is smaller project, roughly 100,000 ounces a year, higher grade, and take the ore to our Malartic mill. So this gets to what we were talking about, the potential at Malartic. You take the ore to Malartic, you don't have to build a mill, and you don't have to build a tailings facility. You don't have to deal with the permitting. And not only is it better return on capital, it's also better environmentally. Because again, you don't have to build a mill, and the tailings facility at Malartic is in-pit deposition. So it's the safest and most environmental way to deal with tailings.
Well, what's a potential timeline on that?
We will be giving more guidance in the middle of this year as to where we see it, what the economics are, the timeline, that type of thing.
Okay. And during your conference call, you also talked about the wider potential that the company sees in the Abitibi district.
Yeah.
Is your preference more for organic growth, like what you mentioned with Wasac, or perhaps do you see the opportunity to take advantage of the low stock valuations to buy some more deposits held by junior developers in the region?
Right now, for 2023 and 24, we have been and will be focused like a laser on these projects that we have. We don't think there's anyone else in the industry who has the potential to add as many high quality ounces safely, leveraging off existing infrastructure. And so we're focused on that. And we're determined to work hard to deliver as much of that as possible. That said, it is a tough environment. We are always talking to people in the regions we operate. They're always talking to us. We are, having been there for 65 years and responsible, we're not only the employee of choice, Paul, we're also the partner of choice, if you would, of everyone around it. So we're not looking to do acquisitions. We're focused on these projects. But of course, we'll always listen to our colleagues in the area and what they're looking to do.
Well, let's talk base metals, if I may. I think you surprised a lot of people last year with your investment into Canada Nickel Company. And it was interesting, I think, that was a flow-through financing, so it has to be spent on exploration. So presumably you want Canada Nickel to really see what the district potential is it there or not? And that obviously followed on the acquisition of 50% of the San Nicolas copper zinc project in Mexico. So it seems you've got a view on base metals. You're trying to position the company for base metals as well. What's going on there?
So Paul, I would say it's not a view on base metals. It's a view on making money for our shareholders in good regions responsibly. So let's start with San Nicolas. Our investment in San Nicolas wasn't because it was copper. It was because it had a very good return on capital. One of the best return on investments that we saw. So first and foremost, it was driven by the economic logic, again, trying to make money for our shareholders. Two, it is in the best region in Mexico to mine, Zacatecas. It's the Abitibi of Mexico, if you would. And that's our strategy, go to the best regions and build a competitive advantage. So Zacatecas, even though it's copper, the reason we did it was, one, because it makes a lot of money, two, it's in a great region, and three, it's with a great partner. So I would say rather than being focused on base metals, we're focused on making money, and we're open to the metal that is there. And that's sort of our view with Canada Nickel. Canada Nickel is a very large, low-grade deposit. It's a vision by the people running it, and for us, it's a $16 million investment, and really, we view it as a long-term option on nickel in our backyard.
Okay. Does the company risk losing its gold premium because of these investments? Is there still a gold premium?
I think, that's a good question. There is a gold premium, but it's declined, and frankly, some of the other metals now have similar premium. But what I would say to you is, what we're really concerned with is we want to make sure that our investors know that we still love gold, that we're going to be a gold company, but most importantly, Paul, we're not going to do anything crazy. And so when we did San Nicolas, and it was in copper, I think without exception, every one of our investors, our owners, understood it, said, yeah, that kind of makes sense. We're supportive. You're good at mining. You're good in Mexico. Zacatecas makes sense. We like that you've teamed up with Teck. We think that makes a lot of sense. So if we did something crazy, of course we would be concerned about it. But we really do try to be careful what we do, again, with a focus on not only getting the best return on capital, but the best risk-adjusted return on capital.
Okay. Now, gold has closed at over $2,000 per ounce for 11 straight weeks. So it's been a fantastic 3 months for physical gold, but the gold equities continue to be in a slump. Why is this, do you think, and what can you do to turn the tide?
Well, I think that's, right now, Paul, I think that's probably the most important and best question. We meet with a lot of our owners, and a lot of our owners now are generalists. And we've had record quarter, record year, as you know, and they're all happy. But they're asking a question. They're saying, look, we like gold. We like you guys. You've done a great job, Agnico. But what we're watching really are the equities. And what they've told me, and these are some very senior people at very big generalist funds, they said, look, Ammar, right now we're focused on the market. The overall market is at a record high. The Magnificent Seven, the 7 top companies are roughly about 25% of the total value of all public companies. And so they've been running with that momentum, but they're watching gold. And so what they also told me, though, is they're starting to get nervous. The market's at a record high. The money's concentrated in a handful of companies. There's going to be elections. There's global geopolitical issues. The U.S. debt deficit has gone berserk. They're worried about the dollar. And what they're saying is, they're not there yet, but they're saying when the sentiment changes for gold, it'll switch very quickly. Let me give you some data they told me. Since 1920, and I got this from the generalist investors, since 1925, there have been 15 market corrections. In 13 or 14 of those market corrections, when the equity index went down on average 35%, gold prices went up, an average 45% increase. So what they're saying is, we don't know if there's going to be a dislocation. We're starting to get worried about it, but we are thinking about positioning ourselves, because in their view, if that dislocation happens, not only will gold go up 45%, or some number, I don't know what it'll be, but not only in their view will gold go up, but gold equities as well will much outperform the general index.
Well, one of the key investors that's starting to really deploy in that way is Elliott Investment Management. They seem to agree with you. They've set up a company to hunt for mining assets, led by former Newcrest Mining CEO Sandeep Biswas. So it seems, some big money is starting to, as you say, take a shine to gold and getting some, great expertise to guide them in that journey.
Yeah, I think it just makes sense. Look, the total gold equity market is $250 billion. That's tiny. That's tiny in the scheme of the overall market. So I think it's very rational for people who've made a lot of money and think we're at the top of what could be a potentially choppy market to take a look at gold equities. And I think that just makes sense. And certainly history, 14 times out of 15 would agree with that.
Recent years, we've seen a few mega deals in the gold space, creating a couple of really big companies. And this perhaps goes to your point about some of the big funds. The company needs to be big enough for them to be able to invest into it.
Yeah.
That makes a lot of sense. But managing a big mining company with multiple assets over multiple jurisdictions is a really tough business to do that and to do it profitably. Have some of these mega deals created companies that are perhaps too big to succeed?
Well, I think clearly sometimes when you get more complex, it becomes difficult. And what I would say is, mining in particular, you can't move a mine, Paul. If I build a mine in country X and things go south, I can't move it. It's built, it's there. And mining, it takes you, 4 or 5 years of exploration, 6, 7 years to permit, 3 years to build, 4 years to get your money back, and you're hoping the government doesn't change or do something in the interim. That's complicated. That's tough. So for us, we're only in 4 countries, Canada, Mexico, Finland, and Australia. We like those regions. The teams there are quite independent. We talk with them every week. It takes me an hour to get to some of our mines. I can be in none of it in 3 hours. So we're able to manage our mines. We're very happy with what we've got. And frankly, our business is not that complex to manage.
Okay. So summing up, Ammar, you had a great 2023. What are some of the key goals and plans for this year?
We're coming into 2024 with very good position. We're coming in strong operationally. We're confident in our guidance. But our real focus this year is to deliver on the Abitibi consolidation, because, Paul, that's what's really going to deliver not only ounces, but highly profitable ounces and a great risk-adjusted return on investment.
Okay. Ammar, as I mentioned at the top, you're a nominee for Kitco Mining's 2023 CEO of the Year Award. And with a great M&A transaction and stellar performance, I had the great pleasure to announce, in fact, you're not just a nominee, you are Ammar Al-Joundi. You are the Kitco Mining 2023 CEO of the Year Award.
Thank you. I'm surprised and honored, and thank you very much. This really means a lot. This is the picture of my wife is going to move off the desk, and this is going there instead.
I wouldn't want to incur the wrath of your wife for that, but thank you, Ammar. Thank you very much for joining us today.
Thank you. Thank you, guys. I appreciate that.
And this is Paul Harris for Kitco Mining at the BMO Metals, Mining and Critical Metals event in Hollywood, Florida. And if you like what you see, don't forget to subscribe.
Kitco Mining special coverage of BMO's 33rd Global Metals, Mining and Critical Minerals Conference is brought to you by First Majestic Silver.